Hey, what's up, everybody? How you doing? I'm Julian, just checking in again for a weekly update. So we are coming in here to the holidays, and I just want to kind of start off with, I think this is going to probably be our last one for the year. I wouldn't be surprised if maybe we threw a surprise one in there somewhere, but I think it's best to kind of plan that this is it. We're going to be taking a bit of a break until I think January 5th. And at that time, we're going to be having some new people coming on board. A lot is going to be changing with kind of this platform within the marketing team. And so hopefully we can get some better sound, video quality, things like that can start to improve, and we can continue to grow with this. So I'm really looking forward to that. I do have a couple of things to kind of talk about that have just been on my mind, been in the news, things like that. So I'll probably bring those up and talk a little bit about where we're going and the things that we're working on right now. And I think that probably the best thing to really start with here is kind of this is something that we've been talking about internally a lot, and that's basically the sustainability of DeFi, kind of the situation that's going on now. I've been seeing I see a lot of questions about things like, hey, how do we get TVL up? Hey, how do we get volume up, and things like that. And I was just taking a look back through the market and where we've come in the last year. And essentially, the market's grown quite significantly, as we all know. This year, I think the total market cap of crypto has gone up about 4x, which is huge. 4-5x, let's say, from about a year ago. When I look at DeFi, it's also grown about 4x or so, which is great. But I think that kind of underlines the fact that that it doesn't necessarily mean that it's grown in relation to the larger crypto market. I think that it's definitely had its booms, but I'd say today we're kind of in a time where there's a lot more institutional investment and participation. There's a lot more bots, high-end developers, arbitrage, things like that have kind of taken over a lot of the DeFi space. And I kind of wanted to explore why a little bit. I think that when we look at DeFi today, the reason we've kind of gone from maybe more of a retail investors into more of an institutional type, or let's say more of an arbitrage type participation is because of impermanent loss. We have to consider the fact that anytime that you jump in to a pool, like an LP provider pool, you've kind of laid down your position in that pool. And if the price changes if the price of the underlying token goes up or down, you're going to suffer impermanent loss. So the idea behind this is, yes, you do suffer that impermanent loss as the prices are corrected. But what it does do is it pays back the LP providers in this reward token. Typically, that's given out in maybe a non-backed token, something like cake token or sushi or whatever. And that's great, because what they can do is they can actually overcome the impermanent loss that you've seen or you've realized, or maybe not yet realized, but they can overcome that impermanent loss difference with this underlying token. You can sell off that token, trade that token, do what you want to with that, and then as a result, you can actually end up ahead. The problem with that is it takes a lot of attention, and I think that as everybody that's listening to this now knows, what happens is we're in crypto, and the market is very volatile. So when you're being paid back a reward in a more volatile token, it takes a much more heightened awareness, and that's why we're seeing this shift from maybe predominantly retail investing in LPs to more like structured, organized, effective teams investing in LPs, and that's fine. I think that's very natural. We've seen these underlying token values go up and down. We've seen people play around with the reward rates, kind of like what Uniswap did with version 3, making it so you can earn more rewards off of your LP based off of price targets. So we've seen some very cool solutions, but I think that we're seeing this first kind of push into more, maybe much more structured DeFi. Maybe things are gonna simplify down a bit and kind of boil down into more, I suppose, less volatile changes as we go forward. So with that being said, that's kind of been a focus, and I think it's been a focus of ours because, you know, market prediction is a core part of our business. You know, how do we plan for our company to operate in 2022, 2023, 2024 if we don't have some idea of where this business is going? So part of that is looking at new improvements, ways to take DeFi and make it more sustainable. That could also include ways to take it and make it more private as well. I could see, you know, B2B type solutions coming out, and some more interesting partnerships and developments coming out that maybe lend to different kinds of participation within the greater crypto market. So I'm excited about that. That's hopefully something we can talk about more on January 5th. You know, going into 2022, we're going to be having a big kind of company launch of the year internally on the 11th, and I'm hoping that a lot of that gets shared here in this channel as well. So talking about some of the other things that are going on here, we are still hiring. We have brought in an additional new hire since I spoke to everyone last. The goal, as I think I mentioned back in October, was a hire a week, which is great. We've been able to kind of maintain that. We do intend to extend that into next year as well. So the runway that we have, the position that we're in as a company, allows us to plan further than a lot of our peers. And what that means is we're going to hire about a person a week here going forward as well. So that's great. What we're building, what we're working on, what our strategy is, and things like that. That's all something I'm trying to prepare for early next year. You don't staff up without some very clear goals in mind, and it's going to take a minute before that's shared more publicly. Going forward, I think that a lot of the hires that we're looking at now through the end of the year are probably going to be more marketing focused. To hire into our development team is becoming much more specialized, which is great. The team is becoming much more rounded out. Oh, now that I think about it, we've had 2 hires since this last call. Sorry. So yeah, like I was saying, development is probably going to continue its focus in hiring next year. So you'll be seeing a lot more posts coming out about that in the near future. As always, if you know people or see people that are interested in working for a growing blockchain company, they should reach out. We're typically up there posting it on Twitter as well. Kind of the last thing that I want to talk about here is BTT. I think we were teasing this a little bit yesterday on Twitter. We do plan to launch on BTT chain. Actually, we had planned to launch on day 1. We're set to go on our side, and to be honest, we're just in a holding pattern now with the BitTorrent chain team. The moment that we get the go ahead on a wrap token, whether that's deployed by us or by them, we are ready to launch. So with that being said, I would expect another blockchain going live on Unifi Protocol by the end of the year, which is great because if I take a look, that would put us at 10 blockchains that we're live on before the end of 2021, and I think that's a great way to start out the new year. So with that being said, I kind of burned through a lot of the issues that I have here and kind of some of the thoughts that I've had. Let me just think if there's anything else interesting out there. the market's been pretty crazy, pretty volatile. As always, that causes people to be more or less active, and so do the holidays. And from my perspective, it's kind of the normal, right? We've been doing this now since early 2018. That's pretty typical of what we see of the space, and I don't expect that that's going to change anytime soon. I've talked about this in the past. I believe blockchain technology is definitely here to stay. Individual cryptocurrencies may come and go. We're going to see tons of changes there. But I think that ultimately, blockchain technology is definitely going to continue to expand here. It's part of why UNFI is not a blockchain, right? It's fairly simple to go in and say, hey, we're going to launch a token, we're going to launch this blockchain, and then our goal becomes users of that blockchain, and our metric for success becomes daily active users or transactions or money on that chain and things like that. And I think that we see this a lot in our peers, right? I take a look at Tron and Harmony are fantastic examples. Tron has had tons of active users for a long time, and Harmony maybe less so. And yet, when I look at market sentiment, I would say that Harmony has done a fantastic job here. And what that tells me is like this competition for users of a blockchain. I kind of see that maybe going away at some point as newer, bigger people start to enter the space. So I'm pretty excited about that future, and I think that's kind of where we are as a company now, is taking a look at where will DeFi be at the end of 2022? Where will NFTs be at the end of 2022? What new blockchains are coming out? Where are people looking to stake or earn new rewards? Where are non-retail investors going to enter the space? How are they going to do that? What are their expectations in terms of safety, security, transaction speeds, ROI, APR? These are things that are completely different for different customers. So that's a lot of what we explore now. And probably most importantly, where do we fit in the next 1, 2, 3, 5 years? So I'm going to kind of wrap there. I do see a question coming in here from HM, and I see one from Graham as well. So I'll go ahead and field a few questions, and then I'm going to kind of wrap up here. So HM is asking, quick question: can we take advantage of using stablecoin pairs that are low on liquidity compared to others like UST? A lot of the UNIFI tokenomics seem to work around volume, right? Yeah, I think that's a good question. I kind of see where you're going with that. The UNFI tokenomics itself, I don't think that they work around volume, though. I do like the question, but I think I'm going to start with the UNFI tokenomics. I was just having this conversation with my team yesterday. The UNFI tokenomics, from my perspective, are based entirely around voting and governance. That's our MO. That's what the token is there for. And I think that in the future, as we continue to build out more products with more people, we continue to expand with this space. What's going to happen is there's going to be more and more ways for people to participate within that ecosystem from a governance and operational standpoint with that UNFI token. And so the value of that token is going to be more or less associated with your participation rights within the ecosystem. So I think that's, and he corrected himself. He meant to say up token. Up token is totally different. So up token is also super interesting. Up token is kind of like our blockchain token, right? I'd say up token is to unify what ONG is to Ontology, what One is to Harmony, TRX is to Tron. And the reason that I say that is just because it's a strict utility, right? It is simply there as a way to capture those rewards and to distribute them back out. So from my perspective, I suppose the only difference there is there was no initial supply. We didn't end up with some initial amount of those tokens. Similarly, they are actually backed by native tokens. So let's get back to his question now, talking about can we take advantage of using stablecoin pairs that are low on liquidity compared to others like UST? Yeah, I think that that's a good point. We can do that probably. We're kind of open to launching any new pairs that we want. Anyone can come in and launch a new pair. UST is a good example of one that could go. How we take advantage of that, I think that's going to be based mostly around community participation. And I think that stablecoin pairs specifically are probably the most sustainable ways to earn rewards. So I think that's a good option. I'll keep it going through some of these questions here. Let's see here. Graham is saying, what are the benefits of owning UNFI? I think that I kind of addressed what this is here, just talking about it as a governance token. I see that being an extremely interesting part of the business. And I see that being not only interesting to retail, to individuals, but I could see that being very interesting to people outside of our current community as well. So there's a lot to kind of happen there. Let me take a look here. So some of these are about specific protocols, which I kind of don't want to get too far into because I'm not, depending on the blockchain, I may or may not be the best person to talk about it. I think this question from Jan about Anchor Protocol, I'm kind of going to skirt the Anchor Protocol, and I think I'm going to just talk about do I think APYs are sustainable through a bear market? So, okay. If the market is not dominated by retail, let's just work through a thought experiment here. If we let's assume the market today is mostly bots and arbitrageurs, right? What's happening then is they're doing price correction. So they're seeing, okay, the token is going up on CoinMarketCap or Binance or what have you, and I'm going to correct that and take some funds off of it. So what I would say then is that, bull or bear market maybe isn't as, it's definitely significant, but maybe it's not as significant as volatility of the market, because the more trades that occur, the more tokens can be mined or earned and things like that. That's going to equate to more rewards within that pair. So I would say that the sustainability of an APY is predominantly based on volatility of the market. That being said, a lot of these AMMs today have minted their own custom tokens that are released based off of time. I personally don't think that that's a very sustainable model, because you're constantly chasing your tail, and we've seen people crank up their rewards already. We're seeing the value of tokens, these kind of rewards tokens fluctuate a lot as well. So I think the sustainability of APY is going to be a challenge when it's given out as a rewards token. There are much more interesting ways to earn really good APY sustainably, ways that we've put a lot of time and effort into, ways that we're not doing publicly today. And I hope we can announce we're doing in the near future. So that's good. That's a good point. And I hope to talk about that in January, actually, a little bit more. Can we talk briefly about, this is Tommy Clark, can we talk briefly about what Unifi aims to do is different to what Atom Cosmos are trying to build? If it is, are they competitors? I don't think Cosmos and Unifi are competitors. I think that, Cosmos is it's a great blockchain. It's good to build on. People are super active there. A lot of community participation there. I wouldn't lump us into that. I don't know enough about what's similar between the two to speak intelligently about it, but I wouldn't call them competitors, because at the end of the day, Cosmos is certainly a blockchain company. We're just trying to build the most sustainable solutions for blockchain. So With that being said, I think I'm going to cut us off here, guys. Thank you all so much. It's been a great year. I look forward to giving everybody here an update again. Looks like January 5th is the next one. And in the meantime, everybody have a good, safe, happy, healthy end of the year. And I'll see you all in 2022. Thanks, guys. Bye.